Hello, everybody. So, in the short term, the movements of HIM's stock is just ridiculous. The stock is trading back at $51 after the most amazing news back to back with the partnership with Wegovy, with the international expansion, with the zero coupon bond until 2028. It's got so many good news, and the stock is down. The stock is down. Why? The stock is down because of GLP-1s. We have news on GLP-1s, and so I can only assume algos are selling because we're seeing some news on GLP-1. Cigna makes a deal for a new copay with Lilly and Novo, and it's hoping that employers are going to offer GLP-1 coverage because of a copay is now somehow lower, and so this is a game changer. And so HIM stock is down 11% right now because of this game changer news of one of the smaller insurance hoping that employers are going to start offering coverage for GLP-1 because they dropped the copay. This is literally why the stock is down 11%. Wall Street forgets very quickly about the fact that the inflection point of the growth for HIMSS was correct, which is we have a company who's had a reset in its growth rate, a reset to the upside, who's now growing faster, over 100% a year. I think this year they'll do a little less than 100%, but probably more than the 78% that I've even put in my spreadsheet. So, of course, HIMSS is down, LifeMD is up, so looking at the pair, looking at the ratio, now you see that HIMSS is almost getting into a territory where it's looking like a better deal than LifeMD. So let me just talk about the news really briefly. So, and my viewers know exactly what I'm going to say, but I'm just going to say it again. I'm laughing. Is the Cigna news a threat? No, it's not a threat at all. Absolutely not. First of all, as always, we need to always remind this. So, to the best of my calculation, to the best of my understanding, to the max, I think GLP-1s will be 30% of the total business max, and that's assuming that things like menopause are not going to pick up for him. So that's assuming that the 4-in-1 pill that they just launched recently is not going to pick up. That's assuming that a lot of their initiatives, assuming that ED, for example, is not going to keep growing as fast. If you assume that, and if you think most of it is going to come to GLP-1, we are going to have max maybe a 30% GLP-1 revenue base. For 30% of revenue is going to be GLP-1 at the end of 2025. Maybe. But a bunch of that GLP-1, by the way, could be HIMSS-made liraglutide. And then, it's also, that GLP-1 is also going to be with the partnership, right? They have a partnership with Novo. So it's, this is not going to be threatened revenue because HIMSS sells the brands now. Aside from the generic liraglutide they make, they sell the Novo brand, right? They sell Wegovy. They sell the actual thing. They have a partnership. Game-changing news. You may remember this video that I made 3 weeks ago. The stock was up 35% on the news that they were partnering with Novo. Partnership with Novo. So anyways, and the media, by the way, and it's still reporting as though HIMSS is threatened by compounding loss. If you look, this is on Seeking Alpha. The first piece of news this morning on Seeking Alpha, okay, so Novo Nordisk programs will go, that's fine. The $200 copay, that's fine. As compounding ban takes effect, how is that relevant? How is that even relevant to HIMSS? Like, they moved to a commercial version. They're not compounding anymore. Like, except in very, very rare instances. The CEO has said multiple times, we're moving everybody to the commercial. It's not a compounding story anymore. But not on the news. The news is like, compounding ban takes effect. So it's just so frustrating. So frustrating. Is the Cigna news a threat? So like I said, it's a story of the out-of-pocket maximum copays for Wegovy and Zepbound being lowered to $200 out-of-pocket maximum copays, and they are, and of course that's in the Evernorth division. So you need to use your insurance. You need to kind of be an expert into how all of these things work, and we're all experts our insurance. So it's for one of the subsidiaries of Cigna, and Cigna is they're hoping that insurance will remove some of the carve-outs against GLP-1 that some employers may have had in the past, because it's now $200 out-of-pocket maximum. So let's talk a little bit about this. Cigna, 19.1 million customers. How many people are there in the US? Is it 350 million? Okay, well, that's a 10% moving news worthy of that, right? So that's one of the smaller insurance. They're hoping employers will remove GLP exclusions from plans and start offering it as a benefit, because you probably know this. I mean, we all know this, but many employers were rushing to exclude GLP-1 medications from the health plan during the 2024 craze, and so oftentimes employers in their health plan, they modified it to lower cost, and they're like, okay, we have like a blanket policy against GLP-1s for weight loss, like we'll cover them for bad cases of diabetes, but that's about it. And so they're hoping employers will start covering them, but that's a lot of hope. And lastly, it's still trad health. Like why is HIMSS moving on trad health news, right? You still need a doctor that's inclined to prescribe a GLP-1 to you, right? The pricing of that doctor visit, that office visit, the pricing of that office visit is still uncertain. It's still not same day, right? And potential follow-up costs, well, that's an office visit. That's not covered in the cost of a medication, right? Many doctors want to see you more quickly. They'll prescribe you something for like 2 months or 1 month, and then they say, oh, I want to see you again in a month, with a smile, right? And of course, it's for your care. It's for your own benefit that they want to see that. It's not at all because they want to earn an over $200 office visit fee. That's not the reason. That's for the care, of course. And because it's for the care, HIMSS allows you unlimited follow-ups. With HIMSS, you have the doctor visit and the unlimited follow-up included in one monthly price. This is a business model change. HIMSS is a disruption at the business model level. It's fundamentally changing healthcare verticals. It's fundamentally changing the business model. It's got pillars. Price certainty. The drug is a digital pharmacy. You don't have to walk into CVS and wonder whether your GLP-1 that was prescribed to you is the partner drug of CVS. And then sometimes you'll have your local pharmacy, your physical brick and mortar pharmacy in trad health. Sometimes they'll switch your medication. They'll change it because the insurance said so, or something like that. Anyways, and lastly, you still have a lot of issues with doctors, for example, not prescribing oral weight loss medication. It's still it's an off-label use of a lot of drugs, but the doctors at HIMSS are comfortable doing that. If you go see a doctor in the real world, you don't know whether they're comfortable doing that. And so when you go through HIMSS for your weight loss, you have a wide range of options, and that's I think the key distinction as to why they're going to win in the marketplace. So you know how much it's going to cost, right? So Wegovy with the doctor visits is $5.99 a month, right? And so that's very competitive. That's very, very competitive. Then you have generic liraglutide, which HIMSS is offering for $2.99 a month, includes doctor visits. But more importantly, and the CEO said that multiple times on the call, oral weight loss pills are a thing, and a lot of traditional doctors in the real world don't want to prescribe oral weight loss medication like metformin or bupropion, because metformin, for example, is mostly a diabetes drug, and so doctors are going to be like, okay, well, I'm sorry, metformin costs pennies, sure, but I'm not going to prescribe you metformin for weight loss because it's a diabetic drug. And so you go into this loop. Well, if you go on HIMSS, it's very easy. You get your doctor visit, and they're going to prescribe you metformin or bupropion for weight loss in an oral medication kit. And of course, I'm not saying they're going to do that. The doctor decides. The doctor always decides if it's good for your case or not. But they're more inclined and more open to even lower budgets than the $200 a month. And these even lower budget are like the oral medications kits at $69 a month. So is this a threat? I don't think so at all. I think this is a nothing burger. This is just a piece of news that's here to move the market. But, first of all, it doesn't impact HIMSS enormously because HIMSS is mostly still today not a GLP-1 story. That's point number one. Point number two, this is one of the smaller insurance non-companies. Point number three, they still need employers to start covering GLP-1s as a benefit and promote that with the insured. That's point number three. And point number four, this is still trad health. You still need to have a doctor. You still need to have a prescription. You still have a lot of uncertainty over follow-up visit, over pricing, over your medication being denied, being changed, over surprise adjustments in the pricing of your drug. You still have all of that. And so I don't think that's a threat at all. I think the market is having a hard time understanding that HIMSS is mostly a business model innovation at this point. Anyways, this was not financial advice, not investment advice, just entertainment. Please subscribe, follow me on Patreon, follow me next. Thank you for watching and have a wonderful, wonderful day.